at 866-848-5699. That's 866-848-5699. Or you can request it online at LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. When the holidays roll in and the cold settles over New England, find your escape in the U.S. Virgin Islands. Trade the freezing temps and gray skies for warm sun, turquoise water, and that easy island energy you can feel the second you land. This December through early January, St. Croix ignites with the Crucian Christmas Festival, a celebration over a century old. Frederickstead comes alive with colorful parades, live reggae, and streets filled with the sights and flavors of real Caribbean culture. It's the holiday season with a tropical beat. From there, explore St. Thomas with its duty-free shopping and the legendary views at Maggins Bay. Or slow down on St. John, where quiet beaches and national park trails make every day feel like your own private adventure. Getting there could not be easier. No passport is needed, and there's no money to exchange. Just pack light and step out of the cold into pure sunshine. This holiday season, let yourself fall naturally in rhythm with the heartbeat of the islands. Visit America's Caribbean paradise, the U.S. Virgin Islands. Go to visitusvi.com and book your trip today. That's visitusvi.com.
At Armstrong Advisory Group, we understand that retirement planning for couples is about making smart, coordinated decisions that support both partners. Hi, this is Chuck Zodda. We've got a brand new free guide called Retirement Planning for Spouses that focuses on key financial moves that every couple should understand, like how to time your Social Security benefits, how to prepare for healthcare expenses and long-term care needs, and how to manage your investment withdrawals in a way that keeps taxes under control while still maintaining the lifestyle that you want. Retirement is a team effort, and this guide may show you how to make the numbers work for both of you. Call us right now at 800-393-4001 to get your free copy of our new guide called Retirement Planning for Spouses. That's 800-393-4001, or you can request it online, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
Text us at 617-362-1385 with your comments and questions about today's show, and let us know what you think about the stories we are covering. This is the Financial Exchange Radio Network.
This segment of the Financial Exchange is brought to you by the U.S. Virgin Islands Department of Tourism. There's still time to book your holiday vacation to St. Croix, St. Thomas, or St. John. Enjoy one or all three, and if you act fast, you could be on St. Croix to experience their Crucian Christmas Festival taking place this December through early January. Discover the magic of this long-standing tradition with incredible food, music, and entertainment, or just go soak up the sun, stroll along white sand beaches, and feel the rhythm of the heartbeat of the islands. The USVI is America's Caribbean paradise. Plan your winter escape at visitusvi.com. That's visitusvi.com.
All right, so yesterday after hours, we received earnings from Micron Technology. Micron, in case anyone listening is wondering, what do they do in the tech space? They are not a processor maker. They are a maker of memory chips, predominantly, and other storage devices, solid-state drives, hard drives, like you name it. Micron makes stuff that stores stuff, I think is the best way to indicate what they do. Now, just to give you an idea of how good Micron's earnings were, Mike, like it's kind of mind-blowing to me that they reported this, because it's just it's wild. So analyst estimates for not even their earnings, but let's do their guidance for the next quarter, because this is really where the meat is. Analyst estimates for their next quarter revenue were $12.06 to $17.38 billion. The guidance that Micron gave was $18.3 to $19.1 billion. Both the low and high end of their guidance was above analysts' high-end guidance, or high-end expectations. Yeah. Which, to me, a couple things. The first is memory prices have been going nuts in the last 6 months in particular, as there's an incredible demand for memory in AI data center build-outs.
Which, by the way, we also need for consumer products. This is not just an AI product.
You do. So part of me looks at this and is like, did a bunch of analysts just like miss the boat on where memory pricing has been going? Because it sure seems like they did. The other piece is, in terms of what this tells us about data center demand, it's you have to get the read-through based on pricing, because, again, if pricing goes up meaningfully in a short period of time, which it has, then it doesn't necessarily mean you're selling more product. It just means it's costing your buyers more to buy that product, which seems to be a combination of what's happening here. Yes, there is more demand, which is driving this, but you can only build these data centers so quickly. Otherwise, we would see this being reflected in the other pieces of demand as well. NVIDIA chips and things like that. Like, you didn't have NVIDIA, miss by 50% to the upside. They beat by, several percentage points, because you haven't seen the same cost push on that side of things. So, ultimately, I think what this does do, AI-related companies have kind of been struggling in the last week or two. And at least right now, this is, helping them to find their footing a little bit, with the semiconductor index up about 2.5% today. You look at, some, big stocks that are up today. CoreWeave's up 4%, AMD's up 3%. Let's see, Oracle's up 2%, NVIDIA's up 1.7%. So you've got a little bit of a spillover here, kind of tempering what had been a sector that was on edge over the last week or two. And so I think that's what you're seeing here, is just a little bit of relief in terms of, okay, the earnings came out pretty well on this company, and even though good earnings from other companies didn't really help the sector in the last couple weeks, this one providing a little reassurance after those companies have been sliding recently.
Yeah, enough of a surprise to move markets. A few things I'll just mention about this. I mean, year-over-year revenue growth is something like 60% on this. This is truly mind-blowing pace of growth, like we have seen from other companies in this space. Let's be honest, like many of these companies, Micron Technology, not exactly a household name, but they are now eclipsing companies like Morgan Stanley, Goldman Sachs, IBM, Caterpillar, American Express, Philip Morris in terms of market capitalization. So this is a very big company now that has grown by nearly 200% over the course of this year. The other point that I will make about this, which is the same one we've made about AMD, we've made it about Broadcom and NVIDIA, these are not companies whose earnings will lead in terms of telling you what's going on with the AI story, right?
Correct.
Like, if you're looking to try and figure out, hey, is this actually going to be a monetizable product, and will companies slow down in terms of their data center builds? Well, that happens last. And therefore, Micron's earnings, NVIDIA's earnings, these would be, I think, the last things to turn over when it comes to demand for AI products, data centers, talent, etc. So it's not that it's unimportant. It's clearly lifting markets today pretty substantially. But it is also not any sort of leading indicator, in my view, about where this industry goes.
Right. It's okay, at a certain point, and the thing that we've been continuing to talk about, if you are one of the companies investing these tens and now hundreds of billions of dollars into artificial intelligence data centers, at some point you're going to have to figure out how to actually make money off them, because matters.
That is the goal with business, yes.
It's generally my understanding is if in the long run you take in less money than you spend, at some point you either have to stop spending that money or you will no longer be in business.
Yeah. The follow-along piece of this from the Wall Street Journal talking about what we alluded to, which is the other thing this means is that prices for memory are going up, meaning your cell phone, your computer, even things like maybe your cloud storage for your business might all be increasing in price. And it's just I think a good reminder that with this AI development, consumers need to understand that we are now heavily competing for electricity, chips, memory storage, even potable water with these giant tech companies, and municipalities are really unsure as to how to handle it all. It is a complicated thing, and we're not dealing with situations where towns, water is drying up, but realistically, like all of these things are public resources that are now in demand in a way that they were not just 2 years ago.
So that's, again, kind of the rundown here is, again, I don't think anyone was expecting weakness here, but I think that the strength in pricing power is kind of mind-blowing on this. But as Mike indicated, look, memory prices have gone up generally, call it 60 to 80% in the last 6 months or so, and that is going to filter into other areas as we go. It also affected, by the way, Micron's business. They shut down, or they're in the process right now of shutting down their consumer-facing business because they pretty much said,
it's not important. We
can't really provide this and continue to be able to provide on the data center side the way that we want to. And so if enough companies do that, then you get into a problem of availability, not pricing. Let's take a quick break. When we return, it's Wall Street Watch.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
Let's talk LDL. AKA bad cholesterol. The higher your LDL cholesterol, the higher your risk of a heart attack or stroke. Your health matters. Know your number. Talk to your doctor and get your cholesterol checked. And learn how to help lower your LDL bad cholesterol. Because your health is in your hands. Find out more at heart.org/LDL.
Did you outgrow your timeshare and now you want out? But you can't. You can't sell it, and you can't get out of the contract. Imagine trying to get out of your mortgage. That's what a timeshare is. You can't just call up the bank and say, I don't want to pay it anymore. But we may be able to help you do just that. Listen, a timeshare maybe for you once was a great thing, but now you don't use it much. And they are not easy to get rid of. Plus, you do have to pay for it every month. Qualified timeshare owners can get out of their contract legally and permanently without ruining your credit or even filing bankruptcy. And imagine, no more mortgage payment or fees. Call the Timeshare Exit Hotline qualification line now. It's free to learn more.
800-455-7967. 800-455-7967. 800-455-7967. That's 800-455-7967. Paid for by Timeshare Defense.
Nobody wants to think about estate taxes or nursing home costs. But if you want to protect your money, your home, and everything you've built, you've got to get ahead of it. That's where Cushing & Dolan come in. They're experts in estate planning and elder law, and they've just released a brand new free guide called Balancing Asset Protection and Avoiding Estate Taxes. This guide lays out practical ways to keep your assets safe, and yes, even reduce or completely eliminate your estate taxes. If you already have a plan but aren't sure what your risk looks like, or you've been meaning to start one, this guide gives you exactly what you need to take control. So don't wait. Call Cushing & Dolan today at 866-848-5699 and get your free copy of their new guide called Balancing Asset Protection and Avoiding Estate Taxes. That's 866-848-5699. Or you can request it online at LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hi, this is Chuck and Mike from the Armstrong Advisory Group. We have a new guide available this month titled Retirement Planning for Spouses. Mike, one of the challenges that spouses face is figuring out how to draw income in retirement and the way to optimize that income, given potentially multiple Social Security payments, portfolios, pensions. Where's a good place to start?
Yeah, of course, with a married couple, you have increased optionality about where your income comes from, which of course means increased complexity and all sorts of different decisions to be made. But yeah, first of all, you've got your Social Security. Depending on the work history of the couple, right, you might be talking about taking your own benefit. You could be taking benefits based on the working income of your spouse. There's no choice to be made there, but there is a choice to be made in terms of timing. When do we start those benefits? What's the age difference between the two of us? If there's a pension involved, what sort of survivorship benefit do we take? Do we consider life insurance as an alternative to that survivor benefit? And then, of course, your portfolio between Roth, traditional, and taxable brokerage accounts. There's a lot of decisions to be made on that side as well. So it's a lot of decision making to be made, and that's where having a good, firm plan about which income starts at what point based on our own life expectancies and taxes is really important.
Folks, the guide is titled Retirement Planning for Spouses, and there are two ways you can request it. The first is by calling 800-393-4001. The second is by visiting ArmstrongAdvisory.com. That phone number again is 800-393-4001, or request it at ArmstrongAdvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Time now for Wall Street Watch, a complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
Well, markets today are bouncing back as Wall Street reacts to the November Consumer Price Index released this morning, which rose at a 2.7% annualized rate last month, cooler than forecasts of 3.1%. Right now, the Dow is up 0.7% or 328 points. S&P 500 is up 1.2% or 80 points. NASDAQ surging 1.7% higher at 395 points higher. Russell 2000 is up over 0.9%. 10-year Treasury yield down 3 basis points at 4.116%. And crude oil up nearly 0.9% higher, trading at $56.41 a barrel. Micron impressed with its quarterly results, where the chip maker issued an impressive revenue forecast and raised its outlook for demand for key products. Micron shares are rallying nearly 12%. Meanwhile, Trump Media and Technology agreed to merge with fusion power company TAE Technologies in an all-stock deal worth over $6 billion. Shares in Trump Media is jumping 34% on that news. Elsewhere, the Wall Street Journal reported that activist investor Elliott Investment Management has built a stake of over $1 billion in Lululemon. Furthermore, Elliott is bringing a potential CEO candidate to the struggling retailer. Lulu shares are climbing nearly 6% higher. CarMax shares are flat after the used car dealer said it plans to lower margins in the fourth quarter and increase marketing spend year over year. Olive Garden parent Darden Restaurants posted stronger than expected quarterly results and raised its annual sales guidance. Darden stock is up over 2%. And Chipotle adding a twist to their menu. The fast casual giant will roll out its first ever high-protein menu later this month, featuring grab-and-go protein cups with a 4-ounce portion of either adobo chicken or steak. Chipotle stock is up over 1%. I'm Tucker Silva, and that is Wall Street Watch. And remember, you can watch the show live every day on our YouTube page. We'll have breaking business news, and all of our content is also archived. So if you want to go see an interview or a discussion about a specific topic, it's all there with the click of a button. Just search the Financial Exchange on YouTube and hit that subscribe button.
Mike, anything else that we want to talk about with Micron?
No, let's move along.
Do we want to talk more on Oracle Blue Owl?
Well, I didn't get to do the program yesterday, so I don't know how deep
Sorry to hear that.
Went here. But I felt a little bit like, it's the same meme we bring up every time. The Charlie Day conspiracy theory meme where he's connecting all the lines together on the board. He's got papers everywhere. He's not making any sense. I felt a bit like that because I was... this story connects the dots between concerns in private credit to AI data center build-out, ultimately even to the Paramount bid for Warner Brothers. And I, again, kind of felt like a crazy person saying that this morning, but aren't these things a little bit coming into focus and interconnected at this moment, given the news yesterday from Blue Owl?
I would say so. I mean, look, here's... The risks heading into 2026. There are three. Private credit could blow up. Housing could continue to slow. Data center expansion could slow. Those are the three ones that are out there. This story kind of encapsulates two of them, the private credit and the data center one. The fact that, Larry Ellison's son also happens to be trying to buy Warner Brothers Discovery
relying on funds from the Ellison Family Trust, which is probably heavily invested in Oracle stock.
Yeah, it's kind of ancillary. Like I don't think that there's any risk that if that deal doesn't go through, or even if it does go through, that it affects the economy next year. So
it's just an interesting
kind of
tailspin.
Yeah. Yes, it's kind of like an ancillary thing where you're like, oh, and this could matter for this reason.
Yeah.
But I do think that the piece that you're going to get to on this is, look, if these things are not profitable right now, which by all accounts, they're not. Right? Like,
yeah.
Oracle we see is free cash flow negative at the moment. OpenAI, from what we can gather from reporting, because they're not publicly traded, is losing money and burning through cash right now. And one would then assume that your other companies that are publicly traded, they can afford your Metas, your Googles, and your Microsofts of the world. They can afford these build-outs because they have other businesses that are cash cows that are covering those costs at the moment.
They can, but the messaging that you're getting from the tech firms is we don't want to deploy our capital on something as boring as a data center. These are facilities that may be profitable, but to the tune of single, maybe low double digits. And why would we want to deploy our capital there when we make 50% margins on this side of our business? So even the data centers that Google, Meta, Amazon are part of the development on and leasing space from, they're basically saying, like, no, we'd rather just, deploy borrowed money here rather than deploying our own capital and missing out on what we think are going to be the bigger returns later on all of this. And so can Meta and Google and Amazon afford to continue to build out data centers? Absolutely. But if the private credit market is not willing to lend the money to it, or they're only willing to lend to certain customers of it, all else equal, I think it just raises the cost of building these things.
It's probably true. So, again, this is something where you put it on your bingo card for next year. Hey, this is something that we need to monitor and pay attention to. Because clearly there's some angst in the private credit space, at least from one lender, as to, I think with Blue Owl, quite honestly, it might just be, guys, we've lent a lot of money to data center build-outs already. Maybe we're just up to our gills in it and just need to not do any more because we've already lent a lot, not we don't like the space.
Well, is it that, or is it also all of our buyers of private credit have put the pause button in?
That could be the case too.
Right? Like,
and
maybe there's just not more money coming to lend.
It also could be, because again, this is what we're seeing, like specifically with Blue Owl. Guys, we trust Meta to pay us back better than Oracle.
Sure.
And I understand why you would. Like, you just look at their balance sheets, their income statements, and you say, yeah, there's a Meta is a far stronger company financially than Oracle is. And I get that. Like, that makes sense too.
So agreed, if it's an Oracle problem only, then it's not really a story.
Which it might be.
It could be. Yeah, it could just be an Oracle story. If it's a larger private credit story, it's problematic.
I agree. This then dovetails into another story from the Wall Street Journal. Again, it's just like the dots are just connecting. Wall Street gets a taste of Blockbuster stock market debuts ahead. And this is something I touched on, I think, yesterday. I might not have. Maybe I just thought this and didn't say anything. It's increasingly hard for me to tell, like, what I've said on air and what, like, I've just, like, been thinking about in my head and haven't expressed as a thought. So if I'm repeating myself, sorry. But there are a lot of liquidity needs next year, Michael.
Talk to me.
Okay, so you've got this whole private credit thing, which is continuing to demand liquidity.
Yep.
You've got data centers that are demanding liquidity. IPOs demand liquidity.
Indeed.
There's a pretty good chance that next year's tax season is going to demand liquidity because there's probably a boatload of capital gains this year. There's just a lot of cash that is needed in the form of actual liquid cash at certain times. And part of me looks at it and goes, how does all of that cash get where it needs to go next year? I mean, if you're talking about an OpenAI IPO and a SpaceX IPO, and at the same time you've got to get hundreds of billions of dollars into data center build-outs and private credit still trying to build portfolios of subprime auto lenders because someone still wants those in their portfolio. Like, at some point you look at this and you go, where's the actual cash going to come from? Because flows are what matter.
Yeah, I don't have a look. It's not to say there isn't plenty of cash in the system, right? Like, plain and simple, if you go look at money market balances and other ways of measuring, different levels of cash, there's still plenty out there sloshing around. But you're right. There's going to be a lot of demands for it come 2026.
And this piece kind of gets at that, too. I'm just going to quote here from the Wall Street Journal. Some bankers and fund managers worry the stock market might struggle to handle the barrage of expected new issuance next year. If SpaceX were to go public, some bankers estimate it could sell well over the nearly $30 billion sold by the largest IPO on record, Saudi Aramco. Overall this year, U.S.-listed companies have raised $46 billion. When companies raise money, it's not like it just appears in their account. Investors have to say, I am going to take either cash on the sidelines, of which there's much less now than earlier this year, or I'm going to sell something else in order to buy this new thing. That money has to come from somewhere. And so that's what this is getting at is, look, if you're going to have IPOs that are demanding, $100 billion in cash next year, at the same time the data center build-outs now need $300 billion and private credit continues to vacuum up a couple $100 billion a year, that's a lot of liquidity that you need. I do not have $1 billion, Michael, let alone several $100 billion to be able to finance this.
No.
So I think that's the interesting piece as I think through this, which is, hey, where does the money come from and how does that influence markets and other things around it? Because flows are what matter. Let's take a quick break. When we come back, we're talking winter heating costs right after this.
Find daily interviews and full shows of the Financial Exchange on our YouTube page. Subscribe to our page and get caught up on anything and everything you might have missed. This is the Financial Exchange Radio Network.
We're proud to announce that Circle K is now the official convenience store of the DAV Department of Massachusetts. At Circle K, supporting those who bravely served our country isn't just a commitment, it's a heartfelt mission. Circle K is honored to stand with the DAV Department of Massachusetts to ensure that veterans receive the care and recognition they deserve. If you'd like to do your part, please visit davma.org. Thank you for standing with Circle K and the DAV Department of Massachusetts, and thank you, veterans, for all you've done.
New Englanders love the Caribbean, and now there's a Caribbean travel channel available for you to learn all about Caribbean culture while you're planning your next trip to your favorite island. The TravelShareIt.com marketplace is loaded with information about the arts, festivals, food, and music throughout the Caribbean, and is an interactive website featuring daily travel deals to any island of your choice. Book your next Caribbean vacation on the most comprehensive travel channel for the islands, TravelShareIt.com. That's TravelShareIt.com. Nobody wants to think about estate taxes or nursing home costs, but if you want to protect your money, your home, and everything you've built, you've got to get ahead of it. That's where Cushing & Dolan come in. They're experts in estate planning and elder law, and they've just released a brand new free guide called Balancing Asset Protection and Avoiding Estate Taxes. This guide lays out practical ways to keep your assets safe, and yes, even reduce or completely eliminate your estate taxes. If you already have a plan but aren't sure what your risk looks like, or you've been meaning to start one, this guide gives you exactly what you need to take control. So don't wait. Call Cushing & Dolan today at 866-848-5699 and get your free copy of their new guide called Balancing Asset Protection and Avoiding Estate Taxes. That's 866-848-5699. Or you can request it online at LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
The Armstrong Advisory Group understands retirement planning, and when it comes to married couples, it can be about more than money. Hi, this is Mike Armstrong, and our new guide called Retirement Planning for Spouses tackles many issues that couples face as they're preparing for later life. This guide keeps things simple, focusing on important matters such as making sure both partners understand where their money's coming from in retirement, being aware of scams, how to stay organized if one spouse outlives the other, and ways to handle gifts, donations, or legacy goals as a team. It's a straightforward look at the steps every couple can take to feel confident about retirement. Call the Armstrong Advisory Group right now at 800-393-4001 to get your free copy of Retirement Planning for Spouses. That's 800-393-4001, or you can request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
Hi, guys.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
Cardiovascular disease is the #1 killer of women,
taking the lives of 1 in 3.
That's more than all forms of cancer combined.
For too long, heart disease and stroke have taken the lives of the women we love.
But we're not giving up.
Because we have something better.
Stronger, more powerful.
We have each other.
When we come together and go red,
the more power we have against our greatest health threat.
Visit GoRedForWomen.org today to learn more.
This is your home for the most comprehensive coverage of the economy and the trends on Wall Street. This is the Financial Exchange Radio Network.
The Financial Exchange is incredibly proud to be a partner of the Disabled American Veterans Department of Massachusetts. If you didn't have a chance to participate in this year's race but would still like to support our great American heroes, please visit dav5k.boston. Your gifts help fund free rides to medical appointments for veterans and the nation's first DAV-led housing initiative, providing homes for single veterans and veteran families. Go to dav5k.boston and make your donation today. That's dav5k.boston.
Piece of the New York Times. Heating costs expected to rise 9.2% this winter. And combination of things. Number one, despite the fact that us here in New England, very few of us heat our homes with electricity. Mike, it's wild that you go to most of the rest of the country, and that's how they do it.
Yeah.
And so if electricity costs are up, heating costs will be up, because if you're heating with those little electrons flowing through your house, they're more expensive to buy these days.
Yeah, we are competing for electricity all over. Where are nat gas prices compared to this time last year?
So this has been wild, actually, watching nat gas over the last couple months. So in early October, actually late September, nat gas prices were running really, really low. Like you were at like $2.60 per million BTUs, which is basically where you were heading into last year. You then saw nat gas prices more than double in the next 3 months, peaking at $5.50 per million BTUs on December 5th. And then since then, they've fallen about 30%.
That's a lot.
And are seeing like 5% swings each day right now.
Yeah.
So there's a ton of volatility in nat gas prices. But remember, nat gas prices that are in place right now, they're not going to affect your rates for this winter because your utility already applied for their winter rates and had them approved a couple months ago.
So the estimate is that households are going to spend about $1,000 this winter to heat their home. That's up 9% from a year earlier. At the same time, federal programming to states that assist with low-income residents and their heat bills, that is being cut this year, and so we'll see how states adapt to that. But again, a lot of these stories that we are covering come back to that affordability discussion, and while I don't think it's directly affecting things in markets or the economy, it seems like it is going to be the only word that matters come 2026 midterm elections.
It might, but I'm also getting to the point now where I think that we are at peak affordability concerns. And I mean this in two different ways. In that if you look at the path forward for the economy, Mike, when we talk about affordability, generally in my mind we're talking about like 3 or 4 things. Shelter, groceries, transportation. I think those are the big ones, and utilities I'll put in there as well.
Yeah, so you're including gas prices and transportation. Yeah,
yeah, like those are the things. Gas prices, bus tickets, car prices, like all that stuff.
Yeah.
Where I'm going with this is, it seems likely to me that one way or another, you are going to see improved affordability in several of those areas in the next 2 to 3 years. Housing prices are falling.
Yep.
That makes it more affordable. Transportation. Gas prices have largely been flat, and the car price thing is a problem. This is one area where I don't have a great sense of how this resolves. I really don't know. On the grocery side of things, I think there are things that are present right now that are going to cycle out and not be a problem down the road in several years. The beef thing that we've been talking about with the smallest herds, beef herds, like when you have small beef herds and prices go up, ranchers say, okay, we're going to allow for more cows in the herd next year, and so prices eventually come down. Like these are things that will cycle through.
Agreed.
The other place that I will go with this, and this is the potential bad outcome that still leads to affordability not being the biggest concern, is if we end up with the jobs market taking a turn for the worse next year, affordability will not be the problem. It will be, do I have a job?
Yeah. Which gets at affordability. If you don't have income, you can't afford the things that you need to live your life.
It's not an affordability thing, though. Like if you don't it's a job problem becomes the bigger one. So that's another path out that's not as good. But I'm just at a point now where I think that, like any problem that's out there, once it's been identified as the main problem, then we start to figure out solutions to it. The problem with affordability, it's not one that you can typically solve from the top down.
No, it is almost never. It does lead me into the conversation that we have with folks all the time, Chuck, which is I continue to feel that in spite of all the concerns I have about the markets, where this AI potential bubble could go, and the concerns that people have there, the underappreciated risk to most retirees that I see continues to be inflation. I know we just got a better than anticipated inflation report this morning, but you need to be asking yourself, when it comes to stories like this, where home heating costs expected to rise 9% next year, can I afford that in my financial plan? Call the Armstrong Advisory Group to ask those questions and test yours out. 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Instacart shares dropping on report that the FTC is probing company over AI pricing tool. Last week we covered the story from, forget where it was. Was it the Washington Post that had it originally?
I don't know.
Who knows? But that Instacart, it was a bunch of users in D.C. tried to buy the same products from the same stores using pickup only, so not delivery, and got a wide variety of prices, which really was grinding my gears, because it's like you're trying to make more profit not through improving your product or service or, finding cheaper ways to do it, you're trying to make more money just through, ripping someone off who lives in a different zip code.
Willingness to pay.
So the FTC is apparently looking into this, and so Instacart was down about 7% on this news. Let's take a quick break. When we return, Hour 2 is coming up.
Sometimes we know what's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
Are you over the age of 50? Want peace of mind and financial security for your family? Here's an important message to you from Senior Care USA. The average funeral now costs over $10,000. That leaves your loved ones the burden of paying your debts and funeral costs. Our plans start as low as $1 per day and will pay your family up to $30,000 to help pay for your funeral and other expenses. There are no medical exams. Your rates will never increase, and your plan cannot be canceled, regardless of your medical conditions, as long as you make your premium payments. Get up to $30,000 in final expense insurance. Call now for free information. Just answer a few simple questions and get approved right over the phone in just a few minutes. Call right now.
Call 800-378-3818. 800-378-3818. 800-378-3818. That's 800-378-3818.
We're proud to announce that Circle K is now the official convenience store of the DAV Department of Massachusetts. At Circle K, supporting those who bravely served our country isn't just a commitment, it's a heartfelt mission. Circle K is honored to stand with the DAV Department of Massachusetts to ensure that veterans receive the care and recognition they deserve. If you'd like to do your part, please visit davma.org. Thank you for standing with Circle K and the DAV Department of Massachusetts, and thank you, veterans, for all you've done.
New Englanders love the Caribbean, and now there's a Caribbean travel channel available for you to learn all about Caribbean culture while you're planning your next trip to your favorite island. The TravelShareIt.com marketplace is loaded with information about the arts, festivals, food, and music throughout the Caribbean, and is an interactive website featuring daily travel deals to any island of your choice. Book your next Caribbean vacation on the most comprehensive travel channel for the islands, TravelShareIt.com. That's TravelShareIt.com.
Here at the Massachusetts Department of Elementary and Secondary Education, we are committed to all students not only attending, but succeeding at school. Your presence is powerful. Share why you attend at doe.mass.edu.
Sponsored by the Massachusetts Department of Elementary and Secondary Education.
This is the Money Matters Radio Network, WBNW 1120 AM and W275 CM FM, Concord, Boston. The Money Matters Radio Network.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
We're proud to announce that Circle K is now the official convenience store of the DAV Department of Massachusetts. At Circle K, supporting those who bravely served our country isn't just a commitment, it's a heartfelt mission. Circle K is honored to stand with the DAV Department of Massachusetts to ensure that veterans receive the care and recognition they deserve. If you'd like to do your part, please visit davma.org. Thank you for standing with Circle K and the DAV Department of Massachusetts, and thank you, veterans, for all you've done.
When the holidays roll in and the cold settles over New England, find your escape in the U.S. Virgin Islands. Trade the freezing temps and gray skies for warm sun, turquoise water, and that easy island energy you can feel the second you land. This December through early January, St. Croix ignites with the Crucian Christmas Festival, a celebration over a century old. Frederiksted comes alive with colorful parades, live reggae, and streets filled with the sights and flavors of real Caribbean culture. It's the holiday season with a tropical beat. From there, explore St. Thomas with its duty-free shopping and the legendary views at Maggins Bay. Or slow down on St. John, where quiet beaches and national park trails make every day feel like your own private adventure. Getting there could not be easier. No passport is needed, and there's no money to exchange. Just pack light and step out of the cold into pure sunshine. This holiday season, let yourself fall naturally in rhythm with the heartbeat of the islands. Visit America's Caribbean paradise, the U.S. Virgin Islands. Go to visitusvi.com and book your trip today. That's visitusvi.com. If you're retired or getting close, now's the perfect time to take a fresh look at your estate plan. Doing your planning early can help you protect your assets and keep more of your wealth in your family. Cushing & Dolan, the leaders in elder law and taxation, have put together a new guide called Balancing Asset Protection and Avoiding Estate Taxes. And in it, you'll learn how to secure your assets if you ever need long-term care, how to avoid having everything tied up in probate, and how to get a clearer picture of your estate tax exposure. The guide also breaks down real options that may help you reduce or even eliminate your estate taxes when you plan the right way and plan early. Whether you have an existing estate plan or starting from scratch, this guide makes it easy to understand what steps could help you and your family in the long run. To get your free copy, call Cushing & Dolan at 866-848-5699. That's 866-848-5699. Or you can request it online at LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and we have a guide available this month titled Retirement Planning for Spouses. Mike, one of the things that I think is really important to focus on are some of the tax planning items that spouses need to consider basically every single year, especially if there are any kind of age differences between two spouses.
Yeah, real life example here. I was working with somebody recently who spouse just retired, and they were trying to figure out where their income is going to come from this year, and the idea of taking some money out of the IRA came up. And so it was a decision, whose do we take it out of, whose is bigger? And the decision ultimately was, we're going to go with the older spouse here because they are going to commence their required minimum distributions earlier.
And so when you're trying to formulate those decisions, whether it's an RMD that you need to consider or potentially, Roth conversions, it's something where the decisions you make one year can have lasting impacts 10, 20 years down the road, depending on the family.
They most certainly can. Again, when you have a married couple, there's increased options in terms of what to do, but that means increased complexity. Things like the widower's tax when you lose a spouse, especially if there's a big age difference down the road. These are things that you can and should plan for because they can make an immense difference in the success of your retirement strategy.
Folks, the guide is titled Retirement Planning for Spouses, and there are two ways you can request it. The first is by calling 800-393-4001. The second is by visiting ArmstrongAdvisory.com. That phone number again is 800-393-4001, or request it at ArmstrongAdvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Mike Armstrong. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is The Financial Exchange with Chuck Zodda and Mike Armstrong.
Chuck Mike Tucker with you here, and we've got quite a nice ripper going on in markets today. Dow Jones Industrial Average up 450 points, a little bit less than 1%. The S&P 500 up 92 points, a little more than 1 1/3%. And the NASDAQ up, looks like NASDAQ Composite up 431 points, 1.9%. So you've got a nice rally taking place today. Primary driver, in my opinion, was Micron earnings yesterday, which is driving tech higher, but it's supported by a better-than-expected CPI report that came out this morning, that while we don't have month-over-month numbers because October did not have a release, year-over-year came in at 2.7% on the headline and 2.6% on the core number, and so that takes a little bit of concern away from the inflation side of things, which had previously been running, close to 3% annually. And so you've got that kind of moving things forward here pretty significantly in equity markets. Bonds not seeing as strong of a response, which is why I think this is more Micron than CPI. 10-year Treasury is down 3.1 basis points to 4.12%, so a little bit of movement there, but nothing huge. Dollar index, a touch stronger, up 0.06% to 98.06. We've got gold off $5.80 an ounce to 43.68 and 10 cents. And crude oil up 56 cents a barrel to $56.50. The AAA national average for gas prices falling again, down another 0.9 of a cent overnight to $2.89 and 0.6 of a cent. A year ago, we were at $3.03.4, so down about 4 to 5% year over year on gas prices. So that is what is moving in markets today. Again, I am absolutely going to love covering this Warner Brothers Discovery story for as long as it lasts.
Gift that keeps on giving.
I hope it goes for the entire rest of my career because I could do this all day.
That's why I got so excited, because it intersected with Blue Owl Capital and AI development. Man, what a week.
I'm just here for the drama amongst billionaires.
Yeah.
Just I can't relate to
Bag
it.
of
but
popcorn.
I just... There's something that I just enjoy, I guess, about billionaires getting cranky with each other instead of trying to just rip everyone else off.
Yeah.
It's kind of like if they're fighting with each other, they can't fight with us.
They can,
right?
but
they can. I know they have minions and stuff like that.
Yes.
Who owns Minions? Is that a Disney property?
Illumination.
No.
What does that mean?
It's a production
Paramount?
company.
I'm guessing Paramount.
I don't know who it is. Yeah, good question. Well,
Universal.
Universal. And who owns them?
NBC.
Comcast.
And who owns them?
Oh, boy. Here we go.
Yeah.
So, in any case, Warner Brothers Discovery sending a message to Larry Ellison, hey, if you want to buy our company, we aren't really sure about you trying to use your personal, your family trust to back the deal, because the assumption, and I don't know, no one does, is that there's a lot of Oracle stock in the family trust, and depending on the value of Oracle stock, that guarantee might not be worth the paper it's printed on. So Warner Brothers Discovery saying, listen, if you want us to even consider your deal, you have to give a personal guarantee of this bid, not just that your trust may cover it, because the trust doesn't give us the same level of comfort.
Now, the Ellison family hit back saying that there's nearly $250 billion in the trust itself. I don't know how to prove that out. I don't know how much it's tied to Oracle stock.
We don't have any information about this. But all I can say is, if there is $250 billion in the trust, if you're trying to buy a company for $80 billion, would it hurt you to pull $80 billion out and put it into your own name and say, okay, I'll guarantee it?
I have no idea. This is such an opaque conversation between billionaires that I could not even begin to relate to it. So I don't know if Warner Brothers genuinely has concerns about this. I don't know if it's reasonable for them to assume that Ellison should sign on the dotted line. I don't know if it's just that they prefer the Netflix bid and they are looking for additional ammunition to throw at the shareholders on this. It's just a bunch of ugly questions, but it is entertaining to sit back and see Larry Ellison squirm a little bit under the pressure of, do I sign on the dotted line for this thing?
Well, did you see yesterday what was going on at Warner Brothers?
No, give me more.
I'm just all here for the juice on this. I don't know why this one has me so excited, but it does for some reason. So yesterday was when Warner Brothers Discovery sent this letter and said, hey, this isn't going to work, right? So the piece that's interesting to me is that yesterday was also when Netflix's co-CEOs, Greg Peters and Ted Sarandis, showed up at the Warner Brothers lot and were being walked around by David Zaslav, who is the CEO of Warner Brothers Discovery. Mm-hmm. I mean, it's about as billionaire trolly as you can get. It's right. Okay, Zaslav is sending the letter to Larry Ellison saying, no, sorry, not interested. You need to personally guarantee it. And then goes out with a camera crew that's taking pictures of it. There's a reason why the Hollywood Reporter had pictures of the three of them walking around smiling. They're all walking around.
This wasn't a secret meeting, is your point.
This is all carefully orchestrated. Send the letter out. Ted, Greg, why don't you guys come over? We'll get some pictures taken and send them over to the Hollywood Reporter.
Maybe we'll spit in his face while we're at it.
So the question that is out there, in my opinion, and you kind of raised it, is Warner Bros. Discovery just outright, no, we don't want Paramount Skydance to buy us? Or is this posturing? And
seems like posturing, Chuck. If you call the media and say, take pictures of us walking around the lot with the potential buyers, it seems a lot like posturing to me.
It is posturing, but you're misunderstanding. This is clearly an orchestrated thing. But is what they're trying to say, stop buying us or give us more money?
I think it's give us more money.
It's interesting.
I think it's give us more money. And I think inviting the Netflix CEOs there was the reality threat to shot across their bow as well.
Because you think so?
Yeah, I do.
Interesting.
Ultimately, what is this about? They don't care. The CEO of Warner Brothers does not have some extra skin in the game other than what is the dollar value of this deal and how rapidly can I close it. Those are the things that matter.
I guess the question is, then why are they not still negotiating with Paramount?
I think this is them negotiating with Paramount.
You think?
Yeah.
Interesting.
Again, you and I don't act like billionaires. I think this is how they do it.
It's true. Maybe there's a reason why we're not billionaires.
Yeah.
But
money?
Among other reasons.
That was the main reason.
Oh.
But there's others too. But it's mostly the money thing. Oh,
I don't know, again, you and I, okay, we sign a deal with someone, we invite them into our house, great, the deal's done.
Yeah.
Billionaires, you sign a deal with someone, you invite them into your house, and then you just completely rip it up and sign a new one.
Correct.
In theory,
you lead them on for another 9 months.
With
the media taking pictures.
I do think this is a possibility, and look, I'm sure that Sarandis and Peters understand the world they're playing in as well. They didn't get to the point where they are by being dumb about this stuff. But I'm also just not sure that. Again, I come back to they're no dummies either.
Agreed.
So, and I also raised this question yesterday, Mike. Warner Brothers Discovery. The big thing about them is there has very much been a winner's curse from Warner Brothers Discovery in the last couple of decades. Right? Things have not gone well for companies that have bought any variation of this.
Yep.
Whether you're talking, AOL Time Warner, whether you're talking AT&T, things have generally not gone well for the companies buying them. Does the loser in a bidding war for them actually, stand a better chance of coming out ahead? Is an interesting question I raised yesterday.
Yeah.
Let's take a quick break. When we come back, we're joined by Luke Kawa from Sherwood News. We're talking markets with Luke when we return.
Text us 617-362-1385 with your comments and questions about today's show, and let us know what you think about the stories we're covering. This is the Financial Exchange Radio Network. When the holidays roll in and the cold settles over New England, find your escape in the U.S. Virgin Islands. Trade the freezing temps and gray skies for warm sun, turquoise water, and that easy island energy you can feel the second you land. This December through early January, St. Croix ignites with the Crucian Christmas Festival, a celebration over a century old. Frederiksted comes alive with colorful parades, live reggae, and streets filled with the sights and flavors of real Caribbean culture. It's the holiday season with a tropical beat. From there, explore St. Thomas with its duty-free shopping and the legendary views at Maggins Bay. Or slow down on St. John, where quiet beaches and national park trails make every day feel like your own private adventure. Getting there could not be easier. No passport is needed, and there's no money to exchange. Just pack light and step out of the cold into pure sunshine. This holiday season, let yourself fall naturally in rhythm with the heartbeat of the islands. Visit America's Caribbean paradise, the U.S. Virgin Islands. Go to visitusvi.com and book your trip today. That's visitusvi.com. If you're retired or getting close, now's the perfect time to take a fresh look at your estate plan. Doing your planning early can help you protect your assets and keep more of your wealth in your family. Cushing & Dolan, the leaders in elder law and taxation, have put together a new guide called Balancing Asset Protection and Avoiding Estate Taxes. And in it, you'll learn how to secure your assets if you ever need long-term care, how to avoid having everything tied up in probate, and how to get a clearer picture of your estate tax exposure. The guide also breaks down real options that may help you reduce or even eliminate your estate taxes when you plan the right way and plan early. Whether you have an existing estate plan or starting from scratch, this guide makes it easy to understand what steps could help you and your family in the long run. To get your free copy, call Cushing & Dolan at 866-848-5699. That's 866-848-5699. Or you can request it online at LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
The Armstrong Advisory Group understands retirement planning. And when it comes to married couples, it can be about more than money. Hi, this is Mike Armstrong, and our new guide called Retirement Planning for Spouses tackles many issues that couples face as they're preparing for later life. This guide keeps things simple, focusing on important matters such as making sure both partners understand where their money's coming from in retirement, being aware of scams, how to stay organized if one spouse outlives the other, and ways to handle gifts, donations, or legacy goals as a team. It's a straightforward look at the steps every couple can take to feel confident about retirement. Call the Armstrong Advisory Group right now at 800-393-4001 to get your free copy of Retirement Planning for Spouses. That's 800-393-4001, or you can request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
The Financial Exchange is now available every day from 11 to noon on SiriusXM's Business Radio Channel 132. Stay informed about the latest from Wall Street, fiscal policy, and breaking business news every day. The Financial Exchange is live on SiriusXM's Business Radio Channel 132. This is the Financial Exchange Radio Network.
All right, as promised, we are now joined by Luke Kawa from Sherwood News, here to talk a little bit about what's going on in markets. Luke, how you doing today?
Doing great, man. Thanks for having me.
Absolutely. Let's kick things off. Obviously, AI been a big focus all year, continues to be, and seems AI-related stocks getting a nice little boost from just a quite the amazing quarter, and specifically the guidance from Micron last night. Can you talk a little bit about what we're seeing there?
Yeah, certainly. So I think the big wigs of the AI complex, and particularly within the memory chip space, so that's Micron, Seagate, SanDisk, and Western Digital. It's really, I think, a matter of the guidance for Micron and also some of the commentary from the conference call. So you had, if you even look at the low end of Micron's guidance for Q2, both for revenues and for adjusted earnings per share, both of those are materially above the highest estimate from anyone surveyed on Wall Street. So this is kind of like one of those just very classic, very blowout reports. So the stocks that are most levered to the memory theme are getting a big bid. And beyond that, I'd say that wasn't the only piece of big news we've had in the past 24 hours. So since Wednesday's close, I'd say some other information that is definitely on the margin, helping a lot of the smaller, more ancillary players in the AI trade, which have come under a tremendous amount of pressure, I'd say, since, about mid-October, are two other things. So Micron basically tells you, hey, AI demand way hotter than supply in the near term, kind of a reaffirmation of something that, hopefully we already knew. Secondarily, I would say, the OpenAI valuation report of raising money again at potentially a $750 billion valuation. If Sam Altman is getting more money, Sam Altman has more money to spend on all of his many suppliers. One of the biggest worries in the market has been exactly that, if that will kind of come to pass. So if you're a Bloom Energy, if you're any of the neo clouds, this has been great news for you. And then finally, the idea of credit risk being a part of AI has been, Oracle CDS has been probably the poster child for that story. However, if you've looked at CoreWeave's bonds, the 2031s that were issued kind of recently, those have traded absolutely terrible out of the gate. So it's certainly something that has been more embedded, broadly speaking, down the stack, or rather more upstream in the AI trade. And if you have soft inflation, which is much softer than expected, this is something that I think is going to help more speculative companies when your embedded risk of default is a part of your stock more so than it is a bigger stock, and your cost of borrowing has been a bigger market concern. Well, this does open up the scope on the margin for the Federal Reserve to potentially have a lower bar for cuts than we might have thought 8 days ago.
Luke, I'm struck by a similarity to kind of what we saw at the end of last year with AI companies where, starting, it was earlier last year, it was in kind of mid to late July, they started to lag the market where they had been leadership, prior to that. This year, they kind of were leaders up until this September-October run, and now they've kind of been lagging again. And this market is, again, it's inched higher and, incrementally made new all-time highs, but not with AI in the leadership. And we've had more volatility as a result. I guess my question is, let's say that the AI trade does, continue to chop around. Is there enough juice in the rest of the market to pick up the slack and run with it at this point?
Yeah, this is something I've been looking at lately. Haven't published, probably will in the near term, but so basically, I think what you're getting at is the idea: can S&P 500 equal weight? Can the median stock outperform in the environment in which the stock market is rising? If you go back, through I think the advent of the S&P 500 equal weight, look at year-over-year change in both that and the S&P 500, about 40% of the time, the S&P equal weight is a leader. However, most of that time where the S&P 500 equal weight is leading the market cap in an up market, most of that is happening as you're coming out of a recession. So that does not describe the case for us now currently. Based on the fact that most of the AI companies do trade at what I would call, an above market multiple. They've also been a above market average source of earnings growth. I would find it very difficult to see, an environment in which there is very meaningful equal weight outperformance of the market cap index in the context of the market rising from here. And, I'd note that we only really got one day. We only really got last Thursday as an example of a record high without AI before we got a pullback. So I think that does kind of show the limits on the ability of the rest of the market to lead. However, what we have been seeing in the broad bounce back since the November 21st intermediate low, it has been about pricing in a revival of global growth. You've had XRT, so retail equal weight, basically hitting 52-week highs. You've had KRE, the regional bank ETF, hitting new 52-week highs. So it is the idea that global growth is going to accelerate next year is something that I think has become fairly well embedded into stock prices, and that's something that creates some two-way risk there.
Fantastic. Luke, appreciate you joining us. Hope you have a great end of the year. Always great to chat, and we'll catch up with you in 26.
Hey, pleasure. Happy holidays. We'll catch up next year.
All right. That is Luke Kawa from Sherwood News talking about what is moving in the market.
All right, we're going to continue our Christmas movie trivia here on the Financial Exchange. In 1983's A Christmas Story, well, it's a holiday classic. The movie is about Ralphie and his desire to get a Red Ryder BB gun for Christmas. So, trivia question today is not related to the gift, but to his brother. What was the name of Ralphie's younger brother? Once again, what was the name of Ralphie's younger brother? Be the sixth person today to text us at 617-362-1385 with the correct answer, along with the keyword trivia, and you win a Financial Exchange Show t-shirt. Once again, the sixth correct response to text us to the number 617-362-1385, along with the keyword trivia, will win that t-shirt. See complete contest rules at financialexchangeshow.com.
Taking a look at markets as we head towards the bottom of the hour. Still a big update going on with U.S. equities here. We've got the Dow up 413 points now. S&P is up 87. NASDAQ Composite up 417 points. So, yeah, things are cranking along on that front. Still got quite a bit that we are going to attempt to get to, including... Mike, I couldn't help but just read this headline and just be like, oh no, they're doing it again. But the headline from the Wall Street Journal, what to do if you suspect you're about to be laid off this holiday season. Again,
I've been having more of these conversations, Chuck.
I have too. I just think that the phrasing in the headline for some reason doesn't strike me as the best, but the actual piece I thought was much better than the headline. So we are going to take a quick break here, but when we come back, we're going to discuss that. We've got the trivia answer. We've got Wall Street Watch. And then a whole lot more as we continue through the show.
Bringing the latest financial news straight to your radio every day. It's the Financial Exchange on the Financial Exchange Radio Network.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
Cardiovascular disease is the #1 killer of women,
taking the lives of 1 in 3.
That's more than all forms of cancer combined.
For too long, heart disease and stroke have taken the lives of the women we love.
But we're not giving up.
Because we have something better,
Stronger, more powerful.
We have each other.
When we come together and go red,
the more power we have against our greatest health threat.
Visit GoRedForWomen.org today to learn more.
When the holidays roll in and the cold settles over New England, find your escape in the U.S. Virgin Islands. Trade the freezing temps and gray skies for warm sun, turquoise water, and that easy island energy you can feel the second you land. This December through early January, St. Croix ignites with the Crucian Christmas Festival, a celebration over a century old. Frederickstead comes alive with colorful parades, live reggae, and streets filled with the sights and flavors of real Caribbean culture. It's the holiday season with a tropical beat. From there, explore St. Thomas with its duty-free shopping and the legendary views at Maggins Bay. Or slow down on St. John, where quiet beaches and national park trails make every day feel like your own private adventure. Getting there could not be easier. No passport is needed, and there's no money to exchange. Just pack light and step out of the cold into pure sunshine. This holiday season, let yourself fall naturally in rhythm with the heartbeat of the islands. Visit America's Caribbean paradise, the U.S. Virgin Islands. Go to visitusvi.com and book your trip today. That's visitusvi.com.
The Armstrong Advisory Group understands retirement planning, and when it comes to married couples, it can be about more than money. Hi, this is Mike Armstrong, and our new guide called Retirement Planning for Spouses tackles many issues that couples face as they're preparing for later life. This guide keeps things simple, focusing on important matters such as making sure both partners understand where their money's coming from in retirement, being aware of scams, how to stay organized if one spouse outlives the other, and ways to handle gifts, donations, or legacy goals as a team. It's a straightforward look at the steps every couple can take to feel confident about retirement. Call the Armstrong Advisory Group right now at 800-393-4001 to get your free copy of Retirement Planning for Spouses. That's 800-393-4001, or you can request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today, we're talking about estate tax reduction and asset protection strategies that can help reduce or eliminate your estate taxes. Todd, there are some high net worth clients that would like to reduce the size of their estate, but they don't want to give up access to their assets. Is there anything they can do?
There certainly is, folks. So this is a combination of things. One, you obviously want to do your basic estate planning first. Get your foundation in place, the basic revocable trust planning to help utilize whatever exemptions you don't use up through gifting. Now, when we talk about reducing the estate, we are talking about gifting. But as you said, they don't want to lose control. So there are these special trusts that are designed called spousal lifetime access trusts, where in essence, you use an LLC to keep control of the investments, manage the investments, and make distributions. And then the non-voting shares get put into these irrevocable trusts where you have each other's spouse has access to the assets. So there's a way of getting the assets into those irrevocable trusts, which are now growing outside of your estate tax free, while at the same time working together to keep control and use what's in those trusts.
The law firm of Cushing & Dolan have been helping families like yours for more than 40 years. Request your copy of Todd's brand new guide called Balancing Asset Protection and Avoiding Estate Taxes by calling 866-848-5699. That's 866-848-5699. Or you can request the guide from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. Time now for Wall Street Watch, a complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
Markets are rebounding and rallying on the heels of strong earnings from Micron Technology, in addition to a better than expected consumer price index for November. The November CPI released earlier this morning rose at a 2.7% annualized rate, cooler than forecasts of 3.1%. Right now, the Dow is up nearly 0.9% or 413 points higher. S&P 500 up 1.3% or 88 points. NASDAQ is surging 1.9% or 428 points higher. Russell 2000 is up 1.2%. 10-year Treasury yield is down 3 basis points at 4.116%. 0.8%, and crude oil up about 1% higher, trading at $56.46 a barrel. Micron impressed with its quarterly results, where the chip maker issued an impressive revenue forecast and raised its outlook for demand for key products. Micron shares are rallying nearly 11%. Meanwhile, Trump Media and Technology agreed to merge with fusion power company TAE Technologies in an all-stock deal worth over $6 billion. That stock, Trump Media shares, are actually up by 32%. Elsewhere, the Wall Street Journal reported that activist investor Elliott Investment Management has built a stake of over $1 billion in Lululemon. Lulu shares are climbing nearly 6%. Shares of grocery delivery service Instacart down nearly 2%, following a report that the FTC has begun an investigation into the company's pricing practices. Olive Garden parent company Darden Restaurants posted stronger than expected quarterly results and raised its annual sales guidance. Darden stock has given back earlier gains and is now only edging higher. And after today's closing bell, we'll see earnings from Nike and FedEx. I'm Tucker Silva, and that is Wall Street Watch. And in the previous segment, we asked the trivia question, what was the name of Ralphie's younger brother in A Christmas Story? That would be Randy. Lisa from Harvard, Mass. is our winner today, taking home a Financial Exchange Show t-shirt. Congrats to Lisa. We play trivia every day here in the Financial Exchange. See complete contest rules at financialexchangeshow.com.
Piece in the Wall Street Journal, what to do if you suspect you're about to be laid off this holiday season. And it has been something that people have been talking about more. And I think this piece actually does a pretty good job of outlining some of the things to consider if you're nervous about losing a job in the next few weeks.
Yeah, I mean, I do agree, and many of them aren't really personal finance related. Yes, there are plenty of financial steps you should take too, but I think that a big one for me is if you focus all of your time on will this or won't this happen, then you're going to be miserable and also not make yourself a terribly good employee in the first place. Right. And so keeping the emotions in check, trusting your gut on things and listening and understanding what might happen. But when it comes to layoffs, if you are worried about this happening around the holidays or in January, there is not much that you can do to control it. And so while I can respect the trust your gut instinct on all of this, there are just some things that are out of your control, and this might be one of them.
I think ultimately the idea of, look, you need to have a plan for what to do in the event that you get laid off.
100%.
And you need to have a plan for, hey, if there either aren't layoffs or if you're not part of them, what do you do to, anytime you go through a layoff situation, it's, kind of unnerving because you're sitting there and you're going, okay, so they laid off, 10% of the company or 5% now. What if they do another 5 or 10 later?
Right.
And so, part of your planning, even if you stay there, could be, okay, do I need to get my resume, in order? And should I be looking for another job now anyways?
Right.
It's like those are, things that you want to have answered, in advance so that you're not having to react down the road.
Yeah, I was speaking to somebody about this just yesterday. They had survived 2 rounds of layoffs. They were still concerned about what's next. And then the other side of this, too, was, we're getting no raises, no bonuses this year. And I've just been asked to basically double my workload because there's fewer people working here. And it's like, wow, that is a rough slap in the face. And obviously not really a time where you can successfully negotiate for an increase, but that is something to look at in the future is, hey, if you do end up surviving these things, you are likely to be more critically important to the organization after the layoffs than you were before. And so it for those survivors can make things a slight positive for their future when you are, the last of the institutional knowledge at your organization.
When the holidays roll in and the cold settles over New England, find your escape in the U.S. Virgin Islands. Trade the freezing temps and gray skies for warm sun, turquoise water, and that easy island energy you can feel the second you land. This December through early January, St. Croix ignites with the Crucian Christmas Festival, a celebration over a century old. Frederiksted comes alive with colorful parades, live reggae, and streets filled with the sights and flavors of real Caribbean culture. It's the holiday season with the tropical beat. From there, explore St. Thomas with its duty-free shopping and the legendary views at Magens Bay, or slow down on St. John, where quiet beaches and national park trails make every day feel like your own private adventure. Getting there could not be easier. There's no passport needed, and there's no money to exchange. Just pack light and step out of the cold into pure sunshine. This holiday season, let yourself fall naturally in rhythm with the heartbeat of the islands. Visit America's Caribbean Paradise, the U.S. Virgin Islands. Go to visitusvi.com and book your trip today. That's visitusvi.com.
Mike, do we want to talk about ghost job vacancies or LinkedIn's year in review?
I want to talk about ghost job vacancies because this is another one. I was speaking with a recently laid off individual where here's what seems to be happening is companies are either posting jobs that they don't actually have any intention of hiring for, or leaving previously filled jobs open because they kind of like the idea of people just constantly submitting resumes. And the experience the person I was talking to had was, you talk to some recruiters, they submit resumes, and you get the impression that the company is just leaving open a job in case they find the absolutely perfect, overqualified, and undervalued candidate with no real intention of hiring. And so, first things first, I find that despicable, annoying, and we should shame those companies that are doing so. But on the other hand,
how do you know who's doing it?
I don't know how you do, and I don't know how you really fix the problem is my bigger issue here. Sometimes it's pretty clear that, hey, it's a fake job post and you can see who the employer is. Other times it's impossible. But there is somebody that's working their way through Congress to try and create this Truth in Job Advertising Accountability Act, calling for the expiration dates for listings, auditable hiring records, and penalties for employers who post misleading or non-existent roles. And where I concluded when thinking about this is anything you do to try and fix this problem, other than just publicly shaming the companies, makes it so companies want to hire less than they currently do. And that is not a problem you want to create for hirers. I was thinking through it, do you make them pay a tax to post a job, or pay a tax if a job posting is out for too long? And all of these led me to the conclusion that, yeah, sounds great so long as you don't mind companies hiring fewer people and advertising fewer jobs, because that is what is likely to happen.
I'm just trying to think through this in terms of why it's a problem.
It's a problem because it's a frustration for somebody looking for work. That's really what it comes down to.
So I'm just thinking through this. When we think of problems that require government intervention, is there an economic cost here?
Somewhat. I'm
going to go no.
It's time wasted. I mean, you can make an argument that it's false advertising.
Most of our lives are time wasted.
Yeah. I have a tough time making that connection. I agree.
So I have a pretty high bar to be like, the government needs to intervene in this fashion. What I do think, let's say that I ran LinkedIn.
Right.
Which, got to tell you, don't think that's in my wheelhouse. But if I ran LinkedIn, if you've had a job posted for 180 days and it's still there, I'm going to send you an automated email saying, if you do not click yes to this email,
we're taking down your job.
We are going to take your job down within 30 days.
Or you can put...
Because, just from a user experience perspective, I don't want users getting frustrated looking through my platform.
Yeah.
That's how I would look at it, is from a customer experience perspective. I don't want my users to feel like they can't use my platform to find a job.
Right.
So that's how I would operate it if I were LinkedIn. Maybe they do that, but it doesn't sound like they do based on any of this stuff that we're reading here.
Or a very easy solution, you can put the date the job was posted and the last activity by the employer right on the posting. There are plenty of platforms that do
also
this.
Totally fine. Yeah.
Job posted, last activity by employer 6 months ago. Cool, not going to apply to that job.
Right, and then let me filter by, last employer activity in the last week.
Yeah.
Totally. So
yeah.
I think there's things that you could do there.
Not a problem that the government needs to be involved in.
No, the government needs to be involved in the problems that we can't solve individually.
Don't let 13-year-olds crawl into coal mines. Yeah.
National defense. You don't want Mike and I standing at the water trying to defend the country. It would go badly. We'd probably end up hurting ourselves. Let's take a quick break. When we return, stack roulette.
Hear the Financial Exchange every day from 11 to noon on SiriusXM's Business Radio Channel 132. Keep it here for the latest business and financial news and the trends on Wall Street. The Financial Exchange is now live on SiriusXM's Business Radio Channel 132. This is the Financial Exchange Radio Network.
At Armstrong Advisory Group, we understand that retirement planning for couples is about making smart, coordinated decisions that support both partners. Hi, this is Chuck Zodda. We've got a brand new free guide called Retirement Planning for Spouses that focuses on key financial moves that every couple should understand, like how to time your Social Security benefits, how to prepare for healthcare expenses and long-term care needs, and how to manage your investment withdrawals in a way that keeps taxes under control while still maintaining the lifestyle that you want. Retirement is a team effort, and this guide may show you how to make the numbers work for both of you. Call us right now at 800-393-4001 to get your free copy of our new guide called Retirement Planning for Spouses. That's 800-393-4001, or you can request it online, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. When the holidays roll in and the cold settles over New England, find your escape in the U.S. Virgin Islands. Trade the freezing temps and gray skies for warm sun, turquoise water, and that easy island energy you can feel the second you land. This December through early January, St. Croix ignites with the Crucian Christmas Festival, a celebration over a century old. Frederiksted comes alive with colorful parades, live reggae, and streets filled with the sights and flavors of real Caribbean culture. It's the holiday season with a tropical beat. From there, explore St. Thomas with its duty-free shopping and the legendary views at Maggins Bay. Or slow down on St. John, where quiet beaches and national park trails make every day feel like your own private adventure. Getting there could not be easier. No passport is needed, and there's no money to exchange. Just pack light and step out of the cold into pure sunshine. This holiday season, let yourself fall naturally in rhythm with the heartbeat of the islands. Visit America's Caribbean paradise, the U.S. Virgin Islands. Go to visitusvi.com and book your trip today. That's visitusvi.com. If you're retired or getting close, now's the perfect time to take a fresh look at your estate plan. Doing your planning early can help you protect your assets and keep more of your wealth in your family. Cushing & Dolan, the leaders in elder law and taxation, have put together a new guide called Balancing Asset Protection and Avoiding Estate Taxes. And in it, you'll learn how to secure your assets if you ever need long-term care, how to avoid having everything tied up in probate, and how to get a clearer picture of your estate tax exposure. The guide also breaks down real options that may help you reduce or even eliminate your estate taxes when you plan the right way and plan early. Whether you have an existing estate plan or starting from scratch, this guide makes it easy to understand what steps could help you and your family in the long run. To get your free copy, call Cushing & Dolan at 866-848-5699. That's 866-848-5699. Or you can request it online at LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Are you over the age of 50? Want peace of mind and financial security for your family? Here's an important message to you from Senior Care USA. The average funeral now costs over $10,000. That leaves your loved ones the burden of paying your debts and funeral costs. Our plans start as low as $1 per day and will pay your family up to $30,000 to help pay for your funeral and other expenses. There are no medical exams, your rates will never increase, and your plan cannot be canceled, regardless of your medical conditions, as long as you make your premium payments. Get up to $30,000 in final expense insurance. Call now for free information. Just answer a few simple questions and get approved right over the phone in just a few minutes. Call right now.
Call 800-378-3818. 800-378-3818. 800-378-3818. That's 800-378-3818.
The Financial Exchange streams live on YouTube. Subscribe to our page and stay up to date on breaking business news all morning long. This is the Financial Exchange Radio Network.
This segment of the Financial Exchange is powered by Circle K Convenience Stores. Circle K is now the official convenience store of the DAV Department of Massachusetts. On behalf of Circle K, thank you, veterans, for all you've done.
Mike, what do you got for me for Stack Roulette?
I've got SEO, which, if you're not familiar, stands for Search Engine Optimization. It is what pretty much every marketing firm for the last decade and half, 2 decades, where are we, 20? Yeah, 2 decades or so, has been primarily focused on is how do we get people on the web to click through to your website, complete a purchase, learn more about your company, and ultimately become a customer. And over the course of the last 2 years, it has been absolutely flipped on its head because of AI. I asked an artificial intelligence tool that I figured would probably have a good conflict of interest, which is Google's Gemini, because they rely on click-throughs as a major source of their revenue. And so I asked them, what are they seeing in terms of click-through rates? They mentioned that the impact on websites show that studies are indicating organic traffic drops, with some websites experiencing 40 to 70% losses, meaning 40 to 70% fewer click-throughs, especially for informational queries that people would traditionally go and click through the website on. And it is... I'm sure that some marketing firms are claiming that they know how to combat against this, but I honestly don't think any of them really do. And it's going to be a really big shakeup in that industry that's already being affected by AI in other ways, right? If you are a content creator, if you traditionally made your living on developing images for companies or creating video, like all of those things are being flipped on their head very rapidly. And this is another big hit to that entire marketing industry.
Wouldn't it be just wild if AI kills the internet?
Oh, gosh, do I hope so.
Careful what you wish for.
Yeah.
Careful what you wish for.
Problematic.
There are people that are, listening to us and watching us right now on the internet.
That's true. Yep.
Right. So I think, be careful what you wish for. But I do just find it, again, it's a hugely, I say the word disruptive technology, not in a good or bad way, just that it's, changing, a lot of how we've thought the internet has worked for the last 25, 30 years. And we're still early days on this thing. It still is very much early days. And I guess I just continue to come back to, at least on like the individual facing side of it, it really seems to me that it's going to be hard for them to monetize it without just going the ad route.
You mean the AI, generative AI tools themselves?
Yeah.
It does seem that way to me.
Unless they can just make enough money off of enterprise for that to not matter. But
it seems unlikely because right now this is a heavily consumer-driven tool.
It is, but think about what consumers use it for mostly. And then, ask yourself, how can you make money on that?
Yeah.
How many people are going to pay $25 a month so that they can make longer videos? Not many.
Yeah.
We don't even want to pay $25 a month to watch longer videos, let alone make them. So I kind of struggle with the consumer-facing side of it and what the business proposition is. The business side, I understand it. I might not like it because it probably has negative employment impacts if it's successful. But I get it. I understand it.
Chuck, to me, it is really just a question of how do these AI tools make all of us the product. Right? That's what every one of these technology-forward, consumer-facing products has been about. At least internet-based products has been about for the last 20 years. Unless you're Apple, where you're able to charge $1,500 per iPhone, the idea has been make the consumer your product, like Facebook did, like Google did. And so how are they going to do that with AI?
Yeah, and I guess it'll depend on what people ask AI. I think about what I use AI for, and it's a completely different set of queries than I use search engines for. Search engines, I am very much, hey, I'm going here, find me websites of the best restaurants.
Yep.
AI, it's explain to me the differences between fiber and protein. Just because when we were talking fiber last week, I just wanted to know.
Drop it.
Yeah, give you another example.
Yeah, explanatory stuff.
Give you another, like, my ski boots are now 25 years old and quite literally are starting to disintegrate. I was looking at different ski boots. I'm like, hey, explain to me, like, what different flex numbers on ski boots actually mean. And it could do that because there's no website that just does that because no one can make money on that as a website. You probably could, but no one did, is my point.
But if you want to know where to buy the ski boots, AI is not going to be great at that.
Right,
at least not today.
Not yet. AI's hope is that it becomes, that agentic AI that goes out and scours prices for you and gets you the best one.
Yep.
But it's not quite there today. So, again, this stuff's kind of interesting to me as we, try to navigate it there. Taking a look at markets. Dow is still up 361 points. S&P is still up 87. NASDAQ is still up 447. So still a lot of green on the board at the moment. And I don't know. I mean, if this thing falls apart in the afternoon, then you got some real problems. But there's no real signs of that. I think it's shown some stability after a couple early tests this morning. But now some additional stability in markets here. The other thing that you got to remember, now that we're through that CPI report, look, next week you got a shortened week. You got a shortened week the week after because of the New Year's holiday then. And so ultimately, you're running up against a calendar that makes it really hard for volatility to show up into year end.
Yep.
It's like there's a mechanical reason why the Santa Claus rally can happen, and it generally it's kind of hard for it to not once you get past some of these reports. Let's take a quick break for the rest of the day. Tomorrow we do still have existing home sales data, so we'll be talking about that and a whole lot more on the Financial Exchange.
If you're retired or getting close, now's the perfect time to take a fresh look at your estate plan. Doing your planning early can help you protect your assets and keep more of your wealth in your family. Cushing & Dolan, the leaders in elder law and taxation, have put together a new guide called Balancing Asset Protection and Avoiding Estate Taxes. And in it,